Digital trade is one of the fast-growing components of international trade nowadays. And within that international trade story, global data flows is really an important factor because it's really the lifeblood of digital trade. Without data, we wouldn't have so much digital trade going on. At the same time, countries have started to regulate the cross-border flow of data that is flowing over the internet. The EU is one entity in the world that has started to regulate the personal data or the flow of personal data across the world. The way in which the EU is regulating that cross-border flow of personal data is by imposing regulatory safeguards in order to guarantee the privacy of the data subject, in other words, of EU citizens, of which their personal data is flowing to another country outside the internal market. However, international companies find these regulatory safeguards quite expensive. And so de facto, or by consequence, it would inhibit international digital trade. Now, at the same time, the EU has also developed a tool with which it can alleviate these regulatory safeguard measures for third countries. It requires, therefore, for these third countries to impose certain rights and certain regulatory rules in order to protect the privacy of EU citizens, of which their personal data is in their country. And so that is called an adequacy decision, and some countries in the world have received adequacy decisions, and therefore international firms that would like to send their personal data to these countries don't need to fulfill these regulatory safeguards. Now, our research has shown that these adequacy decisions that the European Union gives out actually kills two birds with one stone. On the one hand, it facilitates digital trade, and on the other hand, it also protects the privacy of EU citizens.